Welcome to another episode of the Crypto Risk Office Spotlight. In this series of interviews, we are dedicated to investigate and, more importantly, to raise awareness about the best practices for risk management in the crypto space. Today, we have a very, very special guest with us, and we are going to talk about exploring optimal practices for operational due diligence in the digital assets ecosystem. And we're going to do it with John Ward, the Managing Director, Alternative Assets Advisory Group, CRO. Let me add him here. Hi, John. How are you? Welcome.
Thank you very much. I appreciate the opportunity to chat with you. Thank you.
Well, I'm really honored. I know you recently had the podcast with Harry Arslanian, so no pressure on me. Okay. And it was very, very, very interesting. And I'm so glad that you reserved some of your time for us today. Really honored. Thanks.
Thank you. I'm sure Henry will appreciate the extra advertising.
Yeah, I will flag it to him. So, let's because I know we have a lot of things to talk about today, and I will say, okay, let's deep dive straight into it.
Sure.
I know many of our followers might know you already, might know your background, your story. But for those who don't yet, would you mind to introduce yourself? Give us a brief overview of your experience and background, and when did you start your journey in digital assets?
Thanks. So I work at Kroll. I've been here since 2017. Some people may know the firm was originally called Duff and Phelps, and they've rebranded under the name of Kroll, Kroll. Been here since 2017. I head up the firm's operational due diligence practice. Been in operational due diligence for many years. I started years ago at Nomura, the Japanese investment entity, and worked through various fund of funds before joining Kroll. I started in crypto. As a bit of a background, I was teaching classes for the IMDDA, the Investment Management Due Diligence Association, on conducting the best practices in conducting ODDs. And they said that they were getting inquiries around conducting ODD reviews of crypto. I was not deeply familiar with it. I got the inquiry in 2017, and I started my research in 2017. I wrote a white paper in early 2018 for the IMDDA on some key areas of risk that folks conducting due diligence in crypto should look at. That was downloaded a large number of times from the IMDDA website, and that's where it began. So I've been doing crypto reviews since late 2017, early 2018.
Yeah, so you have a very long history in the crypto space, considering it's a very recent new space.
Yep.
Well, when I want to ask you because you have also have a lot of extensive experience in TradFi. Could you explain us the unique operational challenges that digital assets companies face compared to traditional companies?
Sure. So again, for those who don't deeply understand, operational due diligence looks at all parts of how a fund manager operates its business, other than portfolio composition. So we'd obviously look at the types of securities or the types of investments within a portfolio, whether it's real estate, private equity, traditional bonds and stocks and derivatives and things like that, and or of course crypto. And so it is anything from compliance and regulatory to BCP and cybersecurity, how trading occurs, how settlement occurs, who the counterparties are, who the service providers are, the management, governance, control procedures, all those types of things around a fund. Biggest challenges are obviously regulatory issues are very different. So managers are trying to thread the needle of unsure regulatory regimes across the world. So if you want to become a manager, you have to figure out where to have your fund, which rules impact your fund management operation. Two, the counterparties and service providers are different. You don't see Goldman Sachs and Morgan Stanley and Credit Suisse and Deutsche Bank and others. The counterparties are different names. The service providers are offering different services because the type of investment entity, a crypto asset, is completely unrelated to TradFi assets. So, and then obviously, if you're an institution, how do you get your fiat into the fund, or how do you get your fiat out of the fund when you want to redeem. Those are all key areas of analysis that are materially different. And then there's obviously the types of securities in TradFi are only slowly evolving. Swaps were not actively involved, and futures were relatively limited. So the ability to hedge a portfolio has materially changed over time, over the last 6-8 years. So it's a function of there's similarities between the two, but exactly how the similarities are executed are very different.
Yeah, no, I hear you completely. Well, my next question, it seems like a given answer, but considering what happened in the past in the crypto space, I think it's really important that we remind why is operational due diligence crucial for digital assets companies in today's market.
Sure. Obviously, there's been failures of counterparties like FTX and several other major entities that you just don't. You see that occasionally in the traditional fi. Obviously, we saw the failure of SVB and some of the other large fiat banks in the last, let's say, year. And obviously, you go back to 2008, 2010, where we saw failures of Lehman and some of those types of things. So it does happen. Both TradFi and digital assets have that risk. You also have a higher risk component around theft or cyber incursion. So the people who are able to steal digital assets is a meaningful concern because so much of it is written on code, so much it is based on how the code is being used and presented. That very smart hackers have the ability to steal, and so therefore it is a slightly more risk prone or error prone environment than trading the stocks and bonds. You don't hear people waking up and saying, "Oh my goodness, all my my stocks have been stolen from my Merrill Lynch account." That you
Yeah,
don't hear those types of things. So it's just a function of the asset class that leads itself to different thefts and other concerns. And then on top of that is all the same concerns about bad, inappropriate managers still exist in both asset classes. So we have to make sure that even if you're not worried about the risk of theft or regulatory matters, you still have to make sure that the manager is managing the fund however they say they're going to do it.
yeah, sure. Makes complete sense. And is there any other potential risk or pitfall that operational due diligence aims to uncover in the digital asset space, or this is pretty much about it?
Well, I think there's a few other areas. Again, derivatives and stock borrow, stock loan, all those types of things are done through the large commercial banks, and there's pluses and minuses to that. There's much more expense to do stock loan or stock borrows through a Goldman Sachs or a Morgan Stanley or a Barclays, but there's a slightly lower risk environment there.
Yeah,
When you're doing it on a DeFi platform, there's a greater risk environment, but the cost of doing so and the income that can be generated off of DeFi activity, allowing your digital assets to be used for stock borrow, stock loan, those types of things. So again, it's a trade-off. It's a slightly higher risk environment, but it pays more to the asset owner. So those types of areas I think are what need to be investigated. And lastly is custody. So how
yeah,
does one hold digital assets? So I go out and I buy a certain amount of Bitcoin. How do I hold it? Where do I hold it? If you hold it on an exchange somewhere, it is at higher risk of some type of a theft activity. Do you put in a cold wallet, a warm wallet? All those types of things, exactly how custody works, matters and affects trading and affects security. So we've been spending a lot of time with our clients asking us to do reviews of crypto custodians, and therefore they want to really deeply understand who are the people, how is it done, where is it located, where's the process, what is their technology that they are applying for custody solutions. Because again, no one who owns mutual funds or owns any other traditional asset class worries about waking up the next day and say somehow all of their stocks and bonds have been taken from their account. Again,
yeah.
that's just not a realistic in today's day and age in TradFi. So again, that is specific to the digital asset space.
No, thank you for that. It makes a lot of sense. So let's break it down a little and dig more into it in the key components of operational due diligence.
Sure.
So what are the primary areas you focus on when you conduct operational due diligence for digital assets companies? And how do you assess the technology infrastructure and security measures in place within these companies?
Key areas of focus, again, there's some similarities between digital assets and TradFi.
Yeah,
So we need to understand, how does the manager execute its investment strategy? What are they buying it? What are they buying? Where are they buying it? Through who are the counterparties that they're executing, and how they holding it after they have purchased or sold or whatever they've done. So again, custody, how the executions occur, with what frequency. Is it quantitative? Is it point and click? Are they trading on exchanges? Are they trading through OTC counterparties? In other words, how are they doing whatever it is that they do?
yeah,
Two is, how do they move assets? So under what control mechanism do they move either fiat or digital assets to execute the settlement of those of the assets? Again, there your risk is, you're looking for the possibility of theft, or someone taking of assets. Third is valuation. How are the
yeah,
assets valued? Again, so if you're trading if you're invested in a fund that only trades in, let's say, top 5 or top 10 or top 20 digital assets, valuation is not a material concern. But if they're investing in digital assets that trade less frequency, or you're investing in things that are illiquid, whether it's through a venture capital entity, whether it's some type of a SAFT or other type of derivative transaction, how is it valued? And then lastly, what expenses and what charges and what are the fees and stuff that are associated with the fund being accurately accounted for. Those, I think, are the key areas of investigation, to make sure that we understand. And then obviously the governance and compliance and regulatory matters.
sure. We'll yeah, we'll dig more into that. In terms of assessing the technology infrastructure and security measure, do you want to mention anything about it?
I'm sorry, about what area? Infrastructure?
Sorry, how do you assess the technology infrastructure and security measure?
Well, digital assets trade 24/7, 365. On, again,
Yeah,
unlike traditional assets, which usually have a beginning of market opening and a market close. So we need to understand, how is trading done around the world? Are people working in a single location, and different people are awake at different times of the day? Or are they using a follow the sun methodology? There's people trading in somewhere in the Americas, somewhere in Europe, somewhere in Asia, and how does that handoff occur? Um, so therefore, how does what systems are used? Are they cloud-based systems? um, are they using systems and technology that they have created internally to the manager, their own quantitative trading models, or their own settlement applications? Or are they using an off-the-shelf system from a technology provider? Is it cloud-based, or is it locally installed? Are they doing cybersecurity validation? How are uh, keys being stored? Through what mechanisms are they trading for passwords and seeding keys? And are they using some type of sharding technology to guard against theft? And there's a number of technology related questions that we would ask, to make sure that we understand the technology infrastructure, backups, and what happens if their systems go down. What happens if there's a power outage somewhere in the world that affects their offices? How are they trading? How are they maintaining asset security? So those are all key areas of investigation, that we need to understand what the manager is doing to properly account for a variety of risks.
yeah. Okay. Thank you for that. Let's
Yep.
move to talk about regulatory and compliance considerations. So, how do you evaluate whether a digital asset company is compliant with relevant regulation and standards?
Well, fortunately, again, I work for Kroll, and Kroll has a large regulatory and compliance practice, and they can help me, because it's unlikely that one small group of people in the operational due diligence space can keep track of every regulatory action of every regulator around the globe. So I'm fortunate that I can rely on my peers and colleagues. But essentially, it starts at, is the manager properly registered? So is the manager itself, the management company or the general partner, are they properly registered? Have they filed with whoever they need to file with?
Yeah.
Where are the funds organized? Are they organized in Cayman and Mauritius or the BVIs or wherever the fund is organized? Is it properly registered? And we go on the regulatory websites to validate that. So first you start with the manager and you start with the funds, and then you go into their activities. So what are they trading? Where are they trading it? Where are the people located? And we've seen managers who, have people trading out of certain locations. And when we ask, I don't see their proper registration. They basically say, well, we tell the regulator that those people are doing back office or operations type of activity that do not need to be registered. But when
Yeah,
you investigate, you find out they're actually doing trading and things that do need to be registered. So there are certain managers who are not closely following the regulatory obligation, and that type of activity would put an investment at risk. If a regulator came in and said, wait a minute, you are not properly registered to conduct activities that you're doing in our jurisdiction, and they either fine or censure or close down that business entity, that puts the assets at risk. And that's the type of analysis we've done. And we've seen that with certain managers who try to, hide the ball a little bit, if you will, from regulators and hoping they don't get caught.
yeah, yeah. And in like the whole picture, what's what role does regulatory compliance play in your operational due diligence process?
It's a critical element. Um, Regulators are very powerful. They
Yeah,
can close down businesses. They can close down funds. They can initiate investigations that can become exceedingly costly. The
yeah,
manager has to get legal support, which is often going to be charged to the fund, which affects the performance or the assets of investors. So it's a key element because of the power of global regulators. I guess one of the earlier pictures of people in the digital assets in many people's minds is that they were swashbuckling pirates out, chasing a whole new paradigm. And what we've come to realize is funds have to exist somewhere, fund managers have to exist somewhere. Investors clearly have regulatory oversight and tax obligations. So, as much as we like to think it's a brave new world, the regulatory entities have forced conformance on many in this space. And for those managers who choose to try to avoid it, it just becomes exceedingly expensive, risky process to try to ignore or work around regulatory rules. I admit the regulatory rules are opaque and difficult, and the United States SEC and many other places have not been very clear. And we've seen its enforcement through litigation, which I think is totally wrong, but that's where we are. And
yeah.
for those managers who want to go into that environment, they have to realize that and act accordingly.
Yeah, yeah, no, definitely. When moving to governance and business operation, how do you evaluate the governance structure and overall business operations of a digital asset company? And what aspects of a corporate governance and management practices are particularly important in this sector?
Well, I think any institutional investor needs to look at what are the governance structures. So, if the fund is organized as a limited partnership, that means there is a general partner, some organization associated with the investment manager, the general partner, who's responsible for the day-to-day management of the fund. If there is a general partner, there is often no other advisory or governance entity. So in venture capital and private equity, we see an LPAC, a limited partners advisory committee. There is rarely that type of an entity within liquid digital assets. So you
Yeah,
have a general partner entity who is acting completely and solely on their own and in their own interests, and there is no other governance entity. My preference is to have the fund organized as some type of a limited company or exempt limited company, because if it's a company, then there's a board of directors, and the board of directors provides oversight and advisory. So when there is a side letter that is being negotiated, when there are fees that are going to be determined to be charged, when they're looking at the accounting, when they're looking at a variety of different things, I'm more comfortable if there is a board of directors or an advisory board advising the GP as opposed to when there's none. So that's the beginning. And then within the fund itself, is there a compliance committee? Is there a conflicts of interest committee? Is there a management committee? Is there a valuation committee? Not every manager needs to have all of those things, but we also look to see, are there any committees and groups within the fund management entity itself who provide oversight of how the fund runs. If there are no committees, it is obviously scored lower, or there's greater risk, because we're looking for a manager who has instituted institutional controls and has certain committees in place to make sure that the manager is operating appropriately. So that's an easy review of governance structure, who's on the committees, what committees exist, what board of directors, advisory committees, and how do they work and with what frequency. Last thing I'll mention, if everything is ad hoc, in other words, the manager says we have all these committees, but they only act when we need them,
Yeah.
then you question, well, do you really have them?
Yeah.
You're looking for committees that are organized, that have regularly scheduled, have regularly defined duties. Perhaps the meetings are reduced to minutes that can be retained for regulatory oversight. If the
Yeah.
committee exists only on paper but not in actuality, again, it's a bit of a flag for us to say they're not serious. They've created committees that just don't ever meet and therefore have no power.
No, makes yeah, no, sure. It flows and makes all the a lot of sense.
Yeah.
When it comes to vendor and third party relationships, how do you assess the relationships that digital assets companies have with the third party vendors and service provider?
Well, we have the key areas of focus. Again, key are who are the exchanges and OTC counterparties for trading activity, and how does that occur?
Yeah.
What are they using? A centralized exchange? Are they using some type of DAOs or DeFi counterparties? Exactly understanding who they're trading with and how that happens. When it comes to the service providers, do they have a compliance consultant, a technology consultant? Are they providing some type of cybersecurity penetration testing? We verify who those entities are, their skills and capabilities. Do they have custodians? How many and which ones? Or are they using some type of a technology custody solution? Again, which assets? There are a number of custody solutions, but they only cover a limited number of assets. So if you're using a certain technology solution and it's a great solution, but it only covers Bitcoin and Ethereum, that gives me some comfort. But if the manager only has, let's say, a third of his portfolio invested in Bitcoin and Ethereum, and the vast majority of his portfolio investments are other digital assets, I know that 2/3 of the digital assets are not being held in custody with that really good technology solution. So we have to look at what is the manager trading and how are they trading it and how are they custodying it. And perhaps the last key entity to really understand is the administrator.
Yeah.
Um, the vast majority, the overwhelming majority of funds use some type of an administrator. Who the administrator is makes a big difference. And we also realize that administrators don't have a one size fits all or a one process. They sort of tailor make their administrative responsibilities to meet what the manager is looking for. So it's incumbent upon whoever's doing ODD or institutional investors to evaluate who is the administrator, exactly what are they doing for that manager. In other words, are they reconciling trades every day? Are they reconciling trades once a week? Are they reconciling trades only monthly? And there's different solutions from different providers that are vastly different. And as an investor, you need to understand what is the administrator doing and with what frequency. Are they involved with moving fiat or moving digital assets at the request of the manager? Are they reconciling and to whom are they reconciling? How many keys are they have read-only access to so that they can monitor the trading activity and doing all that type of work? So the only way I know to do that is part of our ODD is to have material, either questionnaires or conversations with the administrator to really understand what it is that they're doing and where the risks lie. A manager that is only reconciling once a week or once a month, there's greater risk of theft or other accounting errors. Or delayed NAV statements that come out at the end of the month. Not long ago, 2018, 2019, there were some administrators that were taking 45 to 60 days to get NAV statements out just because they didn't have the knowledgeable staff. I'm not seeing that as much, but there are still some NAVs that are coming out late, and that is an indication that you have a poor service provider if the NAV statements can't get out to investors on a timely basis.
Yeah. Well, I have a question here, the input from one of our community members.
Okay.
When it comes to auditing, because we know that there is a bit of a issue in the space with the uh,
Yep.
many firms are not audited, or like they
The
cannot
big
find
four,
out.
yeah,
Can,
relating to audit.
yeah,
Yeah. So who is the auditor matters. Um, if the auditor has a U.S. entity, or somehow it's being done out of the U.S. Or a global, there is the PCAOB, which is an organization of professional level auditing standards. Is the auditor a member of the PCAOB? And you can verify that on the PCAOB website. Um, if it is a small regional local auditor, you can hopefully find out from the auditor how many crypto funds do they analyze or audit. Again,
yeah,
I would be very wary of an auditor that has a small number of clients because they may not really understand the asset class. Are the audited financials coming out and being issued on a timely basis? There are requirements with when the audits are issued. We've seen some managers that are regularly going on extension in the audits, which are normally come out in the spring, are not being issued to late summer or early fall, 6 months later. That is a warning to me that there's a problem when audits are not being issued on a timely basis. What is the audit opinion? Is it qualified, unqualified? Are there any other language within the audit opinion that makes you believe that the audit has problems in it? It's incumbent upon the investor to look at the audits and look at the audited financials. If the manager says we only invest in Bitcoin and Ethereum, is anyone looking at the audited financial statements and saying, is that true? Do I see other digital assets other than Bitcoin and Ethereum
yeah,
within the audited financials? If they claim they're only using a certain amount of leverage, someone needs to look at the audit financial statements and make sure that the leverage within the portfolio is consistent with whatever the manager says. So again, verifying who the auditor is, what they are doing, is the audit opinion clean? Um, is the audit being done in a Mauritius fund, but the auditor is located in some other part of the world that makes you believe that, wait a minute, that doesn't sound right. How is it they are using an auditor? I'll make this up. An auditor from Singapore to do an audit on a Mauritius fund, and we can't find out that that particular auditor has any office locations within Mauritius. Those
yeah.
would all be red flags as that something doesn't look right. And I now have to be very suspicious about the auditor and the audit opinion.
Okay, thank you for the
Yep.
input.
Yep.
Uh, next step: best practices and recommendation. Based on your experience, what are the best practices you would recommend to digital asset companies to enhance their operational due diligence effort? And then, if you can share any real world examples or a case study where effective operational due diligence made a significant difference.
So I'll make a blanket statement. It clearly does not. It's not a comment about every manager that we've seen. So a lot, again, as I said earlier, some people look at the digital asset space as a completely world unto its own, and they are right in that the assets within the digital asset environment are completely different than the TradFi assets and securities. Completely agree. But there's much to have been learned from the decades of experience from people who are building hedge funds and private equity funds and venture capital funds. And one of the biggest uh, challenges or issues that I see is that new, young, brilliant investors in the digital asset space are not taking any time to understand the history of traditional assets and say, wait a minute, I could apply that governance. I could comply those operational controls. I could apply the things that have been learned about counterparties and service providers and operations from prior TradFi environments and apply that to my current environment. I wish I saw that more digital asset managers were operating their funds consistently with institutional best practices. It is a completely different asset class, the same way commodities is completely different from stocks and bonds. But there are still certain requirements that we hope to see in the asset space. So I would like to see a manager who's taken the time to build infrastructure and support and process, not just letting people do whatever they want to do. So I'm
Okay.
looking for a manager who is well managed. I'm looking for all the things we talked about earlier, cybersecurity and technology and governance and regulatory issues and how they control that. Most managers will have some type of a DDQ, a due diligence questionnaire, that they will produce within the manager, so that when someone like me comes in, I can ask, have you created a due diligence questionnaire that basically addresses high level questions? So I'm going to ask for a DDQ. They should consider either having a virtual data room or have a set group of constantly requested documents easily available. So when I come in, or anybody comes in to do due diligence, they say, hey, do you have a copy of an org chart, a recent org chart? Yes, we have it. Here it is. Not, wait a minute. No, we don't really have an org chart. It's going to take me 2 weeks to make one. And I'll get it to you in a couple weeks. So having someone within the firm who knows where the relevant documents are, that can get them out, and either through email or a virtual data room, share them. um, Copies of audited financials, copies of marketing decks, copies of DDQs, the memorandum and articles of association and registration, all those types of basic documents. Um, if anybody who's doing an institutional review is going to ask for those, so I would strongly urge a manager to have those types of foundational documents easily and readily available, so that a due diligence process goes quickly. And again, our typical process, people are different, but our typical process, we try to meet with the CFO, if there is one, a
Yeah,
COO, if there is one, the chief compliance officer, whoever that is, the chief technology or CISO, or whoever it is that oversees the firm's technology. And then we try to meet with the founders and the investment people, and making those people available. And then the more people that they have wearing 2 and 3, 4 hats. So yes, I'm the COO, I'm the CFO, I'm the CCO.
yeah,
Okay,
that's
that's
certain.
okay. But I'm going to ask you, how do you do all
Too
that?
many
Are you,
hats.
yeah, are you using vendors? Are you using consultants? Are you using other people to help you do it? Because no one can do all three jobs 100% perfectly effectively without help. And then that's incumbent upon us to ask questions of the consultants to make sure that they're good and proper and right and capable.
Yeah, makes a lot of sense. It
Mhm.
reminds me now, I was, again, to mention Harry, listening to your interview with him, and at some point, correct me if I'm mistaken, you mentioned something like, if you go and check and notice that for payments, it's just a single manager filling in a check, and there is
Mhm.
no other second step, third step control. Just walk away, because it means
Walk
it's
away.
something. Walk away. Something is wrong there.
Cash controls, theft or fraud within a hedge fund environment, whether it's TradFi or digital, happens.
Yeah,
um, Hacking happens, or theft happens. We've seen any number of TradFi managers who have either failed or were badly damaged because of insider trading, because of theft or malfeasance or fraud, inappropriate. You just have to look at the SEC filings, and you can see so many managers have been charged and fined and censured by the SEC for doing really bad things. Um, we've seen people like putting their personal expenses on a credit card and then charging those credit card expenses to funds that had totally nothing to do with fund operations.
yeah,
There's any number of really stupid and bad activities that managers have done, and if they do not have good controls, that's when those things happen. I'm aware of a number of managers that we've uncovered fraudulent activity when doing it, not in necessarily in crypto, but
yeah.
in space. We looked at a fund. We had a client said, "Hey, we're interested. We're just starting to kick off a review of this particular manager. They look interesting." And I said, all right, send me over the information. And I started looking at it. And it took me less than 10 minutes. I did a little bit of background on the key founder and found that that person had received a material fine and suspension from one of the European regulatory entities. I
Wow.
emailed back the client and said, did you really do an analysis? It only took 10 minutes. And they said, cancel the ODD. We're not going to invest there. But it
Yeah,
only took me 10 minutes to realize that one of their founding partners had been barred from the industry within Europe. And now they were claiming that they lived somewhere in Asia and were launching a fund in Asia. Um, some
yeah.
people may say, great investor, but that's a big red warning flag. If you're censured from and barred from doing business in Europe, I'm not sure why I should invest with you in Asia.
No, the jurisdiction doesn't change the person attitude, isn't it?
Exactly. So we see that. We see a number of issues. Small managers that have put in place for regulatory purposes or tax purposes certain structures and vehicles that you look at them and they don't hold up to scrutiny. So there is, and part of that again is because the regulatory uncertainty that people are trying to react, but investors need to understand that, wait a minute, these structures are unusual, the counterparties are unusual, how are they trading seems unusual. There's no collateral being taken in certain swap transactions, and how do they know the swap counterparty is going to pay appropriately? There's a lot of risks there that people need to understand before they give their capital to the fund manager. Caveat emptor.
Yeah. Well, no, thank you. Thank you very much,
No,
John. We
no
are
worries.
almost there. I have one last question, maybe
Sure.
two for you,
Sure.
about the future, because
Yep.
why not? Let's pick what is
Mhm.
gonna happen in the future, in your opinion.
Okay.
How do you foresee the landscape of operational due diligence evolving for digital asset companies in the coming years?
Well, some of it, many of the things we've been talking about today, I don't think are going to change a lot. We're still going to be looking at, control environments and making sure we understand how things are being managed and that type of a process. So some of that is not going to change a lot. If I'm talking to institutional allocators, we're seeing a greater reliance and a greater request for ongoing monitoring. So due diligence, I go in, I meet with the manager, I have all these meetings, I write a beautiful, wonderful report, we hand it to the investor, but that is all a reflection of a moment in time, a couple
Yeah.
days, a couple weeks. How do we know 6 months later exactly how the manager is monitoring and managing the fund? I'm not there all the time. We don't have anybody sitting there. So I'm seeing a greater request from institutional allocators to say, uh, I trust, but I want to have an ongoing review of the manager more frequently to monitor the manager and make me aware of things that are changing in the environment. So we're seeing a greater reliance or greater request from institutional allocators for more and ongoing monitoring, and we're building technology in that direction to do better monitoring of managers. And then number two, when it comes to, I imagine there's going to be new products coming to market. We see swaps exist. We see ISDAs slowly being put into place, but I think there's going to be more TradFi-like products that are going to be created. We're going to have more ETFs and mutual funds, hopefully for retail investors. And then lastly, I think the big areas of risk are the fiat on ramps. So we see like SVB and Signature Bank and others who have had major collapses or problems. I think how TradFi and digital assets can continue to work together so that institutional investors can get comfortable putting money into and getting money out of a fund. When we can get to that point, I think you're going to see a larger flow of institutional assets into the digital asset space.
Thank you very much,
You're
John. It
welcome.
was just amazing talking to you today. I'm sure our community members are going to enjoy this content very much.
Yeah.
And
Please
well,
feel free to reach out to me on LinkedIn. I'm happy to
yeah,
connect with you on LinkedIn. Feel free to email if you have follow-up questions. I'm always trying to grow my network within the environment. So feel free to challenge some of the things that I said if you think I'm wrong. And I'm always looking to network and build relationships with more entities around the world, both investors and managers. And I look forward to any feedback that anyone has.
amazing. Thank you. Thank you very much, John.
Thank you.
And have a nice one. And if you come pass from Dubai, like by Dubai, like let us know because we're here, happy to meet you and have a meetup with you.
I'd love to. Love to. Thank you very much.
Thanks. Bye.
Bye bye.